John Ross is a senior fellow at the Chongyang Institute, Renmin University of China, joining us from the British capital, London. John, it's good to see you. What's your take? What do you make of this financial mess in the United States again?
Well, it goes far beyond the liquidity issue, and it's been possible to see it for a long time. I've been writing about it. I've not been wise after the event, writing many articles on this. It's due to the stimulus policies that were launched in the United States, which were based entirely on consumption, that didn't have anything in investment. If you increase demand, that is consumption, you don't increase supply, that is investment, you're going to get big inflation, and that's what happened. And the situation became very serious from the market's point of view as long ago as July last year, when you have, it's a slightly technical thing, but it's the US short-term interest rates became higher than their long-term interest rates. This is very rare occurrence. It's called inversion of the yield curve. It's only occurred 4 times in the last 40 years, and each time it's been followed by a major financial crisis in the US. So it was perfectly possible to see this was coming. Now, of course, what particular form it would take is not possible to foresee, but that there was a big crisis coming was entirely possible to foresee.
Right. John, there are various views and debates going on whether the US is bailing the banks out again, like the 2008 global financial crisis. Is this another bailout at the expense of American taxpayers?
Well, yes, eventually the American taxpayer will pick up the bill by indirect or direct routes. But you have an unbalanced, an unstable financial system in the US. It claims to be, the great pillar of the world economy, and this is the second major financial crisis that has started in the US, in 15 years, because you've got a mad system in the United States whereby the taxpayer picks up the loss and the private banks make the profit. If I told you, go into a casino and gamble, and the deal is the following, that you as a private bank will be able to keep all the winnings, and I as the state will pick up any losses, then the rational thing to do is to go for the highest stakes and the most dangerous types of investments. So that's exactly what's happening. You've got a privatization of profits and socialization of losses, which is occurring in the US.
Right. So the US, John, is also trying to tighten its grip, its hegemonic grip on all the global financial institutions. How do you think that's going to be possible when it has so many problems back home?
Well, it's further tightening its grip. It's always had the grip in it. The US is the only country in the world which has veto rights within the IMF, although it's only 4% of the world's population. This is completely undemocratic. It means that 4% of the world's population can overrule 96% of the world's population. You have in the World Bank a situation, the agreement that the head of the World Bank is always an American. This is also equally ridiculous because it's only 4% of the world's population, and the World Bank is particularly important for developing countries. It'd be far more logical to have a head of the World Bank who came from the 86% of the world's population in developing countries, or even the step forward be that it wasn't part of it should be part of the 96% of the world's population that lives outside the US. And it's attempted to get a grip. It's always been undemocratic. And it's becoming economically irrational because there are a whole series of global south countries, China is the most important, but there are others, that are growing more rapidly than the US. So its weight in the world economy is going down. So you've got a system now which is undemocratic and economically illogical. So this is bound to create problems.
Thanks a lot, John, for that. John Ross there, senior fellow at the Chongyang Institute, Renmin University of China, from the British capital, London.